What's up, everybody? It is Thursday, June 16th, around 5 p.m. Eastern Time. Time for the market analysis video. Wow, what a day it was. So just to recap, Wednesday first, we had the FOMC meeting come out at 2 p.m. Eastern Time, and then Janet Yellen at 2:30. The markets looked like they were going to bounce off of the previous doji and the SPY and kind of bounce off this 50-day moving average. However, the FOMC meeting came out. They didn't raise rates. They gave kind of a more dovish tone, which we didn't know for sure, but it kind of was what the markets were expecting to some extent, and we sold off at the close a little bit to sell off and end right on the 50-day moving average. Gold ended up shooting higher off of the news, kind of reached the relative high that was hit back here in the beginning of May, which is kind of what I talked about in my video, my previous gold forecast video, and that kind of marked the day on Wednesday. So Thursday morning was very interesting. So there were a lot of different things that came out. There was the Brexit poll, which indicated that the Leave camp had overtaken in the polls, not necessarily likelihood, but in the polls had overtaken the Stay camp for Britain to leave the Eurozone, or excuse me, the European Union. So that might have had something to do with it. And then obviously want to mention that the parliamentary member who was assassinated today, so that was very sad news as well, and it was kind of a tragic occurrence, and so our hearts go out to her family. But gold shot up at the beginning of the day, and then hit this 125 number and surpassed it for a little bit. So it achieved all-time relative highs, so highs that haven't been reached in a while, and then immediately started selling off in a real heavy fashion. So we can see here we had massive volume on the day, twice your normal volume, and ended up finishing all the way lower than the previous day before the Fed statement. So I'm not sure what that was based on, but the higher, when it opened higher, the US dollar opened higher as well. And so it was kind of a safe haven play, possibly a play on the idea that Brexit was more likely to happen. And then at some point it got sold into, and either by people liquidating their long position, or B, initiating a new short position. And I think both of those things occurred. You had people who have been in gold and been long gold for a long period of time, who had rode it all the way down, and I think it got back up to this 125 level, which is a bit of a psychological level, or this 1300 on the gold futures, and some people were back to even or close, and they decided to exit. And so I think there was that, and then there was also people seeing it reach an extreme or reach a high and play this kind of channel idea and initiate a short position. On the other side, the SPY, which opened much lower and continued lower on volume, gained all the way back and ended up closing above the 50-day moving average. So this looks pretty bullish in the near term for the SPY, and it looks pretty bearish in the near term, in the short term for gold. However, I would caution that really, I think what it means above everything is volatility, and this idea that we're going to have extreme price movements over the next week or so for this Brexit thing to pan out. So this is not an easy market at this point. There's a lot of event risk as new polls and new data comes out, and things are switching back and forth. The idea that Britain could leave the European Union, I think, there's a lot of question marks and a lot of uncertainty, which leads to more volatile prices, and the idea that there's a lot of chop, could be a lot of head fakes. So at this point, I wouldn't expect necessarily gold and the SPY the gold to drop and the SPY to rise, although that's certainly what it looks like from today's candle. I don't know if you can expect that even tomorrow, although I would say that that's likely tomorrow. But even beyond that, I wouldn't say that it's very predictable in the current market cycle. Now on the 23rd, there is the referendum. We'll see how that pans out. I think fairly obviously, if Britain does leave the European Union, I think that's bullish for gold, possibly very bullish for gold, and it's in the near term probably very bearish for certainly European equities, and probably the S&P 500 and U.S. equities. It'll be very bullish for the dollar and very bullish for gold. That's my view on that situation. If it is a stay, if they decide to stay, I think that's neutral to bearish on gold, and probably neutral to bullish for the SPY, as uncertainty and fear of the unknown kind of comes out of the market. And so I think that it could be a very choppy market cycle until that vote is achieved. And I think even though stay is the likeliest vote even now, it's 60-40 I think at this point, which is pretty close and pretty down to the wire. So there is a real chance that we could have a shake-up in the markets, and I think that part of that was seen today. So with that being said, there was one trade triggered today. I'm not going to show it because I don't think that that's really where the focus should be. It should be more on maintaining your positions, and also the idea that this is not a trending market. And it hasn't been for a while, but I think even in this case, where you have these short waves, I think this isn't necessarily that time either. I think if you're if you're going short here, you probably have you're going short on the idea that Britain is leaving the European Union. And if you're going long, you're saying that on the S&P 500, you're saying that Britain is staying in the European Union at this point. So I would say if you have some kind of view on that, or on some kind of market cycle, I think that's the way to play it. Technicals probably aren't going to mean as much over the next week or so, and so you want to exercise caution and hedge your bets. With oil, looking at oil today, so oil sold off probably due to the idea of market conditions and this idea that there's some real risks and headwinds in the economy, and if you have a poor economy, is poor demand on oil, which will send the prices lower. However, it is entering this band of support from like 1120 to 1070 on USO. So we are seeing that, and it does have the 50-day moving average there as well, so it could easily bounce off of that. So it's hard to say that oil will continue this trend. However, it did break through the 200-day moving average. It'll be interesting to see where it goes from here. But with all that said, it's a tough market. It's probably going to be very choppy for the next week until the referendum on the 23rd, and we'll see how that goes and how things shake out in the aftermath. Until then, God bless, good luck, and great trading.